All righty. Welcome back, folks, to another short trading week here. Top Trades Live kicking off for you. I'm here again with Enrique. Enrique, so good to see you on this cold Monday, Tuesday morning here in the Mid-Atlantic.
I changed up my outfit. I'm wearing a big warm sweater, like because it was 0 degrees with wind chill this morning. So
Yeah, we're all looking the part. Look like I might go chop some firewood or something here.
yeah, it's the kind of sweater it is. Yeah, exactly. I
Well,
actually can I tell you something? This is just random, but I
yeah.
think this is key to this sweater. I think weighs like 3.5 pounds.
Oh,
It's
that's
like
so
one of
great.
those sweaters.
Yeah.
Like you pick it up and you're like, oh wow, that's got so, but it's warm. So yeah,
Perfect for those 4 to 6 weeks in the middle of winter where it's super
yeah.
cold and then sits in your closet the rest of the year.
Well, it was 40 degrees over the weekend. Like that's
Yeah, yeah,
yeah,
that's
it's going
true.
back
Yeah,
and
it
forth.
was it was cool, and then we got the wind come in and got a little bit of snow down here. Now it's freezing. It was freezing in DC too. We are now sitting on Trump Part Two. Uh, the new old president is back, along with some new friends. Um, what are we going to make of this new administration here? Are we going to get a Trump hangover, do you think, now that the dust is settling, or do you think this is going to be just a runway for the markets? How do you see this shaping up in the next few months?
Well, I think we got the Trump hangover already. It's I think that when we stormed to new highs after the election in about that next 3 4 weeks, we got very overbought on the S&P 500. Pretty much everything was moving higher. I think you said it the other day. We probably borrowed some of the Santa Claus rally, and we've been in a correction now since the first week of December, really the last week of November, and a correction that then accelerated with the big moves we saw in rates and the dollar. And you and I were just talking that we have seen underneath the sheets the last couple weeks the market had been acting a lot better. So that's the S&P 500, which obviously the market cap weighted. Bring up the equal weighted, and you'll see what's happening. So I think it's actually the opposite. I think that we had a big party after he won. We were hungover for 6 weeks, and
Yeah.
now it's down to business. And I'll throw this one thing in. I know you were going to hit me with it later, but like randomly, I was looking at one of my services. I forget it was Bespoke or someone, and they run this analysis that they look at the every 30-day forward period in the market. We are at like a 92nd percentile 30-day forward period for performance in the S&P 500. That means if you took all 365 30-day rolling periods across the last 50 years in the S&P 500, this one is a top decile bullish performance. So I think, hungover's worn off. We've had some water, we went for a
Yep.
walk. Things are going to settle down a bit. Yeah, I think we hit new highs in the next 3 4 weeks. So
But I think that kind of goes along too with, I mean, even without the seasonality, or maybe mix the seasonality with what you were talking about a week or two ago, where we have earnings season now that's starting to ramp up, and earnings
yeah,
are pretty darn good so far. Financials are pushing higher. The industrial names, which we can get into a couple of them. I mean, 3M looked great, and that chart longer term is coming up into some prices we haven't seen in 4 or 5 years right now. So it's starting to feel like this is going to be the earnings season that the Bulls wanted to see, and couple that with the seasonality and the 6 or so weeks of chop and backfilling that we got since that post-election rally, and yeah, it does feel like the recipe is here we go. We're mixing up for some new highs, for those December highs to get challenged and then blown through in the next few weeks right here. It
and,
feels
and
most inevitable.
and those bank earnings were solid.
Yeah.
It's like everyone's complaining. What are two of the boogeymen that are out there? One is this giant position unrealized loss that the banks hold in U.S. government bonds. I mean, if I see that chart again, like I always have that. I see it on social, and just so everyone knows, there's the banks have this huge amount of government bonds they bought 3 4 years ago, massive losses, but they don't have to sell. They don't have to sell. So every time I see someone, they're like, "Oh, it's these massive losses." I'm like, "Yeah, it's not a loss if you don't sell. In fact, you get all your money back." In the commercial real estate thing, also, which we could talk about, which I think is another straw man. So, bank numbers are good. We talked, I think, last week about the earnings growth of the rest of the S&P 500, the S&P 493 picking up. Yeah, so far so good. So I think you get a positive earnings season. You get a little bit more visibility with Trump. He didn't come out day one and put 100% tariffs on Chinese everything. Lo and behold, and this is the crazy thing about Trump to me, this is the juxtaposition, is I feel like culturally and verbally, he's very like bombastic. Yeah. Policy wise, in his previous administration, he was very straightforward and very measured. This was always my challenge with Trump is I was like, I love his policies. I just think the guy, he's a lot. He's a lot to deal with. If he just shut up and do what he's doing, he'd be great. Right. But it's playing out again. It's playing out again. He's going out there. So I think that puts a lot of that puts some maybe lets the market relax a little bit, that their worst nightmares about what does Trump 2.0 look like. What he's doing? He's doing what he did on policy, Trump 1.0, is that he's pretty measured, pretty logical, a lot of bluster, and then the follow through is, pretty rational.
Yeah, it kind of feels like when, thinking back to Trump 1, there were a lot of short-term, I guess, murmurs in the market with, you get a midnight tweet about something, China tariffs, and then the market kind of freaks out. But overall, that all seems to erase itself. So you have to sort of deal with the Trump tremors of whatever the rhetoric happens to be or how he presents it. And then you're kind of, once you zoom out, you're okay.
That is the perfect example, is that like he'll just say some crazy S and everyone freaks out. But he doesn't do crazy S. He just says it. I think that's the key. So I think as people, we get through these next few weeks, which are going to be the most dynamic few weeks, right? Because we got the big changes that are going to be happening. I think the next 8-12 weeks, if it comes out to be measured, and look, it's funny when that jobs report came out 2 weeks ago and crushed the market. Part of me harkened back to the jobs report that came out after the hurricane. And I don't know if you remember, we had a spot on call. A couple of people that I know and respect went through the August or July jobs report, and they were like, yeah, this is hurricane related. Remember, that was a weak one that crushed the market. And, part of me was just thinking when the jobs report came out 2 weeks ago, I was like, you know what? This is going to get revised. It's never as crazy high as people think. And lo and behold, we get the CPI and the PPI, and they weren't crazy. So I think we're in this middle ground. It's our brains always want to go to feast or famine, right? That's kind of like what we're drawn to. But the reality, and I'm going to take this big picture here in a second. I don't know if you can pull up the level of Fed funds rate on there, but the reality is I think we're in a world that looks a lot like the late 1990s, right. Which is, and I want to go through this one topic because it really annoys me when I see it. The market can go up at the same time that the Fed raises rates, okay, or does nothing with rates. We don't need rate cuts for the market to go up. How do I know that? Well, the market just went up 40% as the Fed was raising rates. So I literally know that. And the other thing to think about, we're so accustomed in the 2000s, in this millennium, to the Fed being schizophrenic, right? It's like, oh, we got to cut to zero. We got to raise it. Back in the 90s and periods of the 80s, sometimes they just didn't do a lot. They raised by 25, and then the next time they cut by 25, and net, it didn't do anything. And you know what? Those were the best years, the best consecutive years in the stock market ever. So all this noise about interest rates, and I wrote a couple pieces about this in Truth and Trends, the noise about rates and the dollar, it's all garbage. It's BS. It has nothing to do with actually making money. If you want to go off on like, oh, the dollar, this, have fun, nice intellectual conversation, wear a nice sweater like this with a bunch of books and do all that. If you want to make money, though, it ain't going to do you any good. And I think it detracts. It detracts. It hurts people's ability to make money. That's what pisses me off about it.
Well, it does feel like, I mean, speaking of the dollar, it is finally cooling off here a little bit after quite a run right here. But you're still in the camp where we can just ignore this and concentrate on other things in the market right now.
So I wrote a note. I think that we published
Yeah.
yesterday
Mm-hmm.
that I'll make two. Well, there were two comments in that note. The first comment is that pull up the RSI chart on the dollar, and it was really oversold back in September, August,
Yeah.
right?
Yeah.
Just like the bond was. So I don't see the movement in the dollar as some grand change in global hegemony or paradigms. I just see it as we had an asset that was really oversold and it got unoversold and it got overbought. That's all that's happening. The second, and I wrote two truth and trends. One was about rates and one was about the dollar. And I said the same thing's happening to both. They're just trading together. I said with rates, I only care if they go up a ton and are really high.
Yeah.
And this is neither of those. And with the dollar, I will tell you, I've been doing this for 30 years, and the US dollar has never actually impacted the American stock market in 30 years that I've done this. Okay. 30 years. I don't see any reason why it's going to change now. So I just think it moves. It's fun to talk about. We all use dollars. So, we can all, but it's worthless. Let's focus on what makes money. Let's talk about some stocks, let's go through some tickers. But yeah, get that noise out of your head. Because if you were following, if you dollar rate panicked, you just panicked yourself out of, let's just take a look. I'm going to pull the SPW equal weighted, because this is more like where people are making money. We just saw, Bloomberg's pulling up a little slow today. I think we just saw a 5% move in the SPW. Oh, more than that. Look at this. On the 10th, it was at 7020. Yeah, it's a 5% move in a straight line. You just moved if you were freaked out about and that's a lot. I mean, extrapolate that to other stuff. There, you can see that move right at the end, right off that 200-day moving average, by the way.
Yeah.
Clean as a whistle. So get rid of the noise. Focus on what makes you money.
Yeah, I feel like when it comes to things like, and maybe this isn't the best way to describe it, but when it comes to like the dollar and rates, it's more of the fear of a bigger rate of change coming that affects people more than the actual fluctuations in rates or the dollar themselves.
I think in the short term, but I my theories are my beliefs on this.
Yeah.
I just think it's all BS. I mean, I think the stock market sold off because we had a huge party after Trump won. We had a hangover, our head hurt, we were nauseous, and that was 6 weeks of trading in the market. And it just so happened that it coincided with the dollar and the bond and the rates being very oversold. So those rallied. So people ipso facto. But, I go back to what I said last week. Go look at what the rates did the 6 weeks before. They also went straight up. And the market went to new highs. So it's really what happened on December 9th that it changed. No, it had to do with when we went into the election, the market had a lot of angst, a lot of worry. After the election, we partied hard. And then, we've been burning that off. And now I think we're done. We're done. We're ready to move higher.
Yeah. Well, shifting gears, or maybe not shifting gears so far from Trump, the Bitcoin's back on the move again. It dipped into the 103s or so this morning. It's up close to 106 at the moment right now. And I'm using your trick where I'm chopping zeros off when I'm talking about it. I started getting bulled up again on Bitcoin after that fake out lower last Monday on the 13th when it dropped below 90, and that was quickly
below 90. Back.
And it looked really good. And
I wrote a couple people up. Yeah.
And I wrote about it toward the end of last week, talking about how it seems like new highs are inevitable, and maybe short term we get to about 120, just judging by some like a measured move here from the previous rally off of this big choppy consolidation spot. Well, not as big and choppy as the consolidation that we had, that we dealt with for most of last year. But it feels like we're really firming up here, despite the fact that there was a little bit of crypto shenanigans over the weekend with, the Melania coin.
Yeah. Don't get me started. But No, I love Bitcoin here. I look. I think we're going to be honestly. I think we're 125 to 150 within a couple months.
Wow. Yeah,
Straight
that's
away.
that's aggressive. I can see it. I mean, it feels like this consolidation here, if we're looking at, the lows of this horizontal zone between, low 90s to those highs around 106, which we're getting above right now.
Look,
I mean, much
look at
tighter
the
than what we saw back here. And if that's the halfway point and, we have the move from 70 all the way to the mid 90s here, then that makes sense to me that,
take the chart back to the middle of 2023 and look what happened in January of 24. So go to late 23.
yep.
Look at that consolidation in the beginning of 24, right?
Right.
So go to
Yeah.
December, look at that consolidation, and then look at that breakout in February, March.
Yeah. Yeah.
That's what I think that's what we're setting up for, because
I mean,
things are just going to be more chill now. Like,
yeah.
Believe it or not.
Right. And then there's also not the specter of like excessive crypto regulation, and there's the appearance of Trump being cool with it, even though he didn't say anything about it yesterday. I know some people were talking online about they'd be disappointed that crypto wasn't mentioned, but still, I think it's a given that he's going to back up and let this thing, thing run, I would assume.
Do this intellectual exercise. Ask yourself, what is the probability or possibility that Trump comes out and says either of the two things, mentions, even if he's just talking about it, even if it's just riffing? The first is more crypto regulation. The second is buying Bitcoin as a reserve. Okay. I'm going to say there's 100-to-1 ratio of Bitcoin as a reserve, even if he doesn't do anything, right?
Yeah.
He can talk about it all day long and not do anything. So ask yourself that. And, I think and when it breaks through this 110 level, it's not looking, 130, 150 is the next stop. We've just seen the stair step over and over. So I love it here. And I would definitely pull it, on any of those pullbacks below 100. I think it's, very viable. One stock, maybe I'm going to skip ahead. We're just going to kind of bounce around, but I think it's on everyone's mind. Pull up Apple. Okay. Because I think there's a lot of people that own Apple.
Yeah, that's on my list because I've actually a lot of people who aren't really market people have asked me about Apple recently. It's getting a lot of attention.
So Apple is I'm just pulling up my chart here. Apple is a microcosm of what I've been saying about overbought, oversold. Mm-hmm. I remember at year end, Apple had an RSI at one point of like 81.
Yeah.
And I'm like, wait a second. This thing, we've got a $3 trillion market cap. It grows EPS low single digits. It's got an RSI of 81. It went up, like literally, I'm looking at this chart. I swear from November 12th to December 26th, I don't think that Apple I don't know that it had a down day or more than one. It literally was up 90%. I actually think I saw this. It was up 90% of all days. So here's my point. When you get things like that exuberance, that enthusiasm, and it's all one way, you're setting up for a disappointment. And the greater the degree and duration of that exuberance, 40 days that it traded up every single day, or 90% of them, the worse the hangover, right? The bigger the party, the more shots of tequila you did, the worse your hangover is going to be. And that's where we are right now. And then now, all of a sudden, people are like, oh, well, tariffs. Oh, they just lost their space in China. Like, oh, you knew all this stuff 4 weeks ago when Apple hit 260. Nothing happened. It's just we reversed the momentum. So what do? This is what we talk about all the time. I remember we had this conversation about gold a while back, and I was sitting there and I was like, I love gold. It's just super overbought. I wouldn't touch it. And what did gold do? Pull up gold real quick. I haven't even looked at this chart. Gold has consolidated now.
It's really good right now, yeah. But it did.
Yeah. But so this was back in October. It was at the end of October, and gold's done nothing for 3-4 months, and now it's getting pretty interesting. By the way, 2 weeks later in November, at the 100-day moving average, we were talking about buying gold. I think it's the same with Apple. So let's take a big step back. This is very important. When you know the primary trend of the market, we're in a bull market. above the 50, 100-day, 200-day moving average, especially that 200-day,
Mhm.
you're going to go through these waves in both the market and stocks. And what you want to do is when they're really friggin' overbought, you want to lighten up, you want to avoid them. And when they're really oversold, you want to buy them. So Apple with an RSI of 28.5 today, I'm darn interested in Apple.
Yeah, I figured you would be. I had it on my short list to talk to you about because it looked like
well, and even more important with Apple, what I don't want people to do, it's sort of like our interest rate conversation, right? It's like some people go, oh, the market can't work if Apple doesn't go up. Well,
Yeah.
go look at that chart that right there. Look what Apple did from January. This is another one. It's just quite randomly. Go look at the same chart we did with Bitcoin, which is from the summer of 23. Apple, I mean, look, Apple's just doing what it did last year. On the 14th of December, 2023, it hit a high of 199.62. It proceeded, by the way, to drop 20-some% into April 19th after being super overbought. And then it recovered. And I think these are the patterns, and this is like whack-a-mole. You can just hit this over and over and over and over in a bull market. And this is how you churn out returns. This is what the Maverick does, right? We're just finding these uptrends. I'm probably not going to recommend Apple, in the Maverick. It's just too big. And I don't know. I think I've got more like unknown ideas, but I would buy Apple here. I would buy Apple. I would sell puts on Apple. I think especially with this so oversold here recently that it's it's primed for a bounce.
Yeah, I mean, and earnings coming up. I mean, this is just guessing and playing around with ideas, but like, if you had a nice negative reaction to earnings here, something like that got bought when they announced on what is it, the 30th? So
30th, yeah.
So a little over a week from now, they're going to be announcing earnings, dipping below the 200-day right there. That would be a prime spot to, try to scoop up shares or something like this once you have earnings in the back. I mean, it could on earnings. I don't know, but
I agree with that. But sometimes I would actually nibble on Apple beforehand to a certain extent. And here's the reason why. I think your logic is super sound, but I also think it's probably what everyone else is thinking.
Oh, yeah,
yeah. So with just if I take a 90-day, by the way, I just ran the numbers before we got on the call, quite randomly. If I look out at an RSI of 29 and I look out 90 days, this is across the last 10 years. This has only happened 18 times. That's pretty rare across 10 years. And the stock is up an average of 13%, and it's up 72% of the time. So, that's a pretty darn good bet.
I mean, just going back to the deep oversold reading back there at the beginning of March last year.
Can I tell you what else is interesting? I never see this data. This is very rare. The worst loss you took this is crazy. I didn't realize this. In the last 10 years, if you bought Apple at an RSI of 29, the worst loss you ever took across 90 days was 7%. That's the biggest win you had was 35. That's an asymmetry of returns. Perfect. So for 72% chance of winning, 15% average return, but your loss is, your average return is double your max loss. Now, look, is this time different? Sure, I guess. Maybe, but I'm going to go, I'm going to go with Apple's kind of the same thing. Let me just do one thing. I'm going back 20 years now. 20 years, the data gets a little murky because we get some funky. Oh, we get back before the iPhone. So I throw that out. So
before iPhone, that's a whole totally different era of Apple.
It's just not the same company.
Sure.
It's worthless. Yeah, the last 10 years. I love Apple here. I think it's a great. I wouldn't even call it a speculation. I think it's a super high probability bet.
Yeah, no, definitely an asymmetric bet right there with that data. That's great stuff. And also, just anecdotally to sort of feed into this, it's funny how over the past several weeks, as Apple has gone down, the negative news, of course, has piled up. And it's always this negative type of speculation where Apple can't innovate. That that
This
that
is
starts to steamroll. And
this
Zuckerberg was
is
talking smack about it on Joe Rogan, and so that
the
starts.
narrative. The narrative follows the price.
Yep.
This is what I'm saying.
Mhm.
All the
Yep.
China, that China, that they're no longer the number one phone sold in China. We knew that a month ago.
Yeah.
Like anyone who did any work knew that 3 months ago. It just follows the price. So don't, the news is the tail, not the dog.
Yeah.
And you got to learn to tune it out. It's probably one of the most important lessons. Price equals truth, which is one of the things that we say. And price is ultimately going to teach you how to make money better than whatever the hell they're saying on CNBC, whatever the narrative of the day is.
Yeah. I mean, I love this. I love this idea, and I definitely had Apple on my list of things to talk to you about. My other mega cap to talk to you about was Google, which is hitting all-time highs, or was hitting all-time highs, breaking out of this flag earlier today. It seems ready to run. I know.
So do you remember 3 months ago, 2 months ago, my number one pick on the Mag 7 was Goog.
Yep. That's why I'm bringing it up. Yeah.
Yeah, because it had lagged. It had lagged. It got its butt kicked back in September. I like it here. I think that, for our look, this is one where our two types of trading might merge. I loved it 3-4 weeks ago,
Yeah.
2 months ago when it was lagging.
Yeah.
And I like it here because I think you can see a breakout. And one thing that's interesting about stocks like Goog and Nvidia, and I think this is a little bit of what happened with Apple, is one thought process would go, they're so big, they must be hard to move. But the other thought process is, if you're an index manager and you're missing this, you've got a problem. I think that's what really contributed to Apple's move at your end, was
Okay.
you had index managers. If Apple moves, and so just so everyone knows, many managers are measured against the S&P 500. Apple's like 7% of the S&P 500. That means that every 15% move in Apple is like a percent of performance, okay, for the S&P 500. So if you were underweight or didn't own it, and it starts running, I think you could see the same thing happen with Goog. So I think you can see this breakout. Yeah.
This is also a great illustration of what you were talking about with Apple right now, where you can see back here where we had extremely oversold Google sneaking below the 200-day right there, where it starts getting accumulated again. And then, extrapolate that out. If you're getting in any time along in here, it doesn't have to be perfectly at the bottom, but this was a strong buy right down here at this little breakdown area.
And do you remember the narrative at the time, what everyone couldn't stop talking about?
It was Google's way behind with AI, maybe. Was that it? Or was it something?
So there were two narratives.
Okay.
Number one was that Google was vulnerable to AI, which I use Google all the time, and I got to tell you, their AI is pretty good. I've actually started, and part of my view on that was they literally spend $50 billion a year in R&D. Yeah. Like they spend what ChatGPT has spent. They spend 5 times what ChatGPT spent in the entire history of the company per year.
Yeah.
And there's no way that that they're not gonna get AI right. But second, it was the antitrust judgment.
Right.
That, and we wrote an entire note about it. And I was like, I don't know, maybe, but it ain't gonna happen anytime soon. And if I'm buying the stock with an RSI of 27, back in September, I mean, I know they got a good balance sheet. So yeah, I think that's what you can do. You can make money in these big caps. And someone asked about Apple, would you buy the stock or options? The answer is yes. Just remember, when you're buying stock, you've got less upside, less leverage, but you have less downside, and time is your friend. When you're buying options, if you're long a call option, time is your enemy. So it just depends on your own risk tolerances and all that. Well, I'm not going to opine on any particular options. What I love with Apple is actually selling puts, because then you can bring in some income, and, if it continues to fall, you just own the stock at an even better price.
Nice. Yeah. Love it. I think this is, again, a great example of, taking something real time like Apple and then showing what could possibly happen when you get these readings by going back and looking at exactly what happened with Google in the end of Q3 and Q4.
So right, I see one comment in here, John Plumberg. I'm not saying, you say easy to look back and say when was a good time to buy. We actually said it at the time. And
Right.
I'm pointing it out
Yeah.
because we're saying Apple is a good time to buy right now. So this is not, I'm not sure this is the comment you were making. This is not Monday morning quarterbacking. This is, we were quarterbacking at the time, said to buy it, and now we're saying Apple is the same, is a very similar setup. So that's why we mentioned Google as the setup.
Yeah. Yeah. Um, Moving on to some other like new administration stuff. There's this guy you may have heard of, Elon Musk, who's been around a lot, seems to show up at every single Trump event at Mar-a-Lago, and now is he going to move into the White House too and have the bedroom down the hall? Uh, there are
I thought I read that he's not getting a spot in the West Wing, but then I read something else that said he was. I don't know. I'm not sure.
yeah, I don't know how long
It should be.
that
It should
relationship
be
lasts.
a sitcom, by the way. I can't wait to see the Trump Musk sitcom. I'm like,
When are they going to start fighting is my question. But
yeah.
we are starting to see some interesting movements. I think now that Elon has been thrust into this, or thrust himself into the spotlight right here, it feels like the space stocks, and these are super volatile and very speculative. But you look at names like I saw Rocket Lab was on the move earlier this morning, and this thing is, I mean, breaking out in huge ways. It's up almost 30% today. I assume that this is more Elon narrative and less the fact that it got a maintained buy rating from Citigroup today. I could be wrong on that, but it feels like some of these stocks that have just gone absolutely crazy, even leading into the election here, are starting to extend again. It feels like, again, I'm not really trying to compare the two, but we have like Trump coin, people buying that. We have people going back to the well and buying some of these more speculative spaceman stocks right here. I'm very surprised that folks are getting bulled up again on some of this stuff that I thought might need a little bit more time to chill out. You know what I mean?
I feel though like the story of this bull market has been rolling mini bubble speculations.
Yeah,
Like
sure.
I remember 22 and 22. 22, you're good, John Plumberg. I knew where you're coming from. You're a good guy. Like I nauseates me too when people do that. Sorry. I remember in 2022 when NFTs were going off and SPACs were going off, and it was everywhere. It was everywhere, man. Crypto was going off.
Yep.
And here I feel like, it was like Mardi Gras, right? Here we've got little parties that break out, and then they act pretty naturally,
Yeah.
which is you get something goes a little crazy and then it gets smacked down,
Yeah.
and then it rolls to something else. So I sort of feel like as long as we're having just like little parties,
Mhm.
without it turning into a full conflagration or something, I think I'll even go so far. I think it's healthy for the bull because it keeps people excited and keeps people interested.
Yeah.
Yeah, I just would register the note, which we talked about when we were talking about uh, the whatchamacallit, the quantum stocks last week,
Right.
is you want to show up at the party to get the first drinks. You don't want to get the last ones.
Right.
And
Yeah.
so I think that it speaks to your style a lot, which and the opportunities is kind of wait for it and pick these up when they first break out, but then be patient because I'm looking at Rigetti, and Rigetti's been nuts. Like, look, it went from 2 to 20 to 6 to 12. I don't, like I said, I guarantee it's going back to 5.
Yeah.
But you want to get in these before. Just be careful. Just be
Yeah.
careful because it's very
Yeah.
sexy to see a
And
stock go
like
from 2 to
I
20.
look at them too. There's sort of that rotation amongst these same the basket of stocks are in the same industry. So you have Rocket Lab, which is up, 27, 28% today. This is not something I would buy right here on this type of candle. But you look at other names like you in the same group, you have ASTS, which has been, and I'll extend my little line here. This thing looks like, it could eventually get to the point where it really starts to break out. So it's up 10% today. I would need to give this a little more time before I would say, yeah, I definitely want to buy this, because you can see the fake outs where it almost got there and then retreated back in October, November, and December. Maybe this thing firms up since it's in the Rocket Lab category. And then you have LUNR, which I think is also on the move today. So,
I think ASTS is really interesting. It's yeah, I think that's a really interesting idea. Obviously highly speculative. Obviously, want to keep a tight stop on it.
Yeah.
But given what's happened to Rocket Labs and everything else, I think it's yeah, I like that idea.
And this is something you can just buy shares on too, just buy a taste. You don't have to do anything
Yeah,
crazy, if something like this starts to break out. But if something what I'm getting to, if something like Rocket Lab starts happening, I'm starting to watch the also rans in the group too, to see if they want
yeah.
to play catch up, to see if we rotate amongst that industry. And like you mentioned, the Rigetti's, was that RGTI? Um, you know, it had the SmackDown that you talked about there. Just a whole week of all the people that got in late, losing their lunch right here. Now it's trying to bounce. Ah, this is one of those
It's
names
it's
where
it's hard, man.
yeah,
Like,
it's
but it
hard.
comes back to what I was saying before. We went through Rigetti. They have barely any revenue. They're losing money, and revenue's going the wrong way.
Yeah,
I don't need it in my life. Like,
yeah.
Rigetti is a glorified meme coin.
Oh,
And
absolutely.
so
Yeah,
if you're going to trade the chart, trade the chart. But like, what happens? What we do is both you and I, we find replicatable chart patterns that are based on human psychology that have underlying companies underneath it that can actually support it. So you're not just trading a meme coin.
yeah,
Um,
and I will say on charts like this where you have such an immense run up in such a short amount of time right here, and then you get the reset and it starts to move higher again. Anecdotally on these, I feel like this is the kind of spot where people get a little bit too bulled up too quickly, and they start assuming that you're going to get a immediate move back to the low 20s from 12, when in reality it might take a lot longer. If it gets up there at all, you might just be in a nasty whipsaw zone between 6 and
yeah,
12 bucks. I mean, this range here, I know it doesn't look as big just because of this run up here, but this range is massive from the 50-day at 650. That's a double up here to 13
it's
bucks.
crazy. It's
Just be
crazy.
aware, that there's no guarantee that, like, oh, it's going again, this thing's going to get back to 20 by
It's
Friday.
hard too because logic would dictate an experience. This could be at 5 by the end of next week too. So let's maybe I see a bunch of questions here that I'd actually want to tackle, like with some kind of almost like a lightning round. Would you be down for that?
Yeah, absolutely. I have a list of tickers too from earlier, so let me hit IONQ real quick before we hit on
Okay.
that. And it's kind of the same idea.
Yeah.
It's the same idea as Rigetti. Obviously very speculative. It's probably, I want to say this is more of a marquee name in the group, if there is such a thing yet. Uh, but again, like, I'd be very wary of folks thinking it's a foregone conclusion that this thing's going to just break 50 and magically run right here. We might have a little bit more of a mess on our hands and more chop heading forward.
Yeah.
So maybe a good speculation, maybe not. Not something I'd want to really touch here.
Too tough to call. Too tough to
Yeah,
call is actually what I'd say. Is like you just don't like. I don't like stepping up to that table.
yeah,
And it's stepping up to a table that at best it's a coin flip, and but I guess an interesting coin flip because you either make 50% or lose 50%. So
right.
it's a high volatility coin flip. But I don't play coin flips. I walk up to tables that I know
Yeah,
I've got a probability to win, not just a possibility.
yeah, absolutely. All right, you want to hit me with the
Well,
tickers?
I'm just pulling off the chat here.
Okay.
Intel was one
Yeah.
that with the speculation today. Why don't you tell me what you think, and then I'll chime in.
Oh my, oh my. So Intel has not been going up lately. I think it's safe to say that we're still in some sort of a downtrend. It's trying to base out. Um, it has moved off its lows. Earnings are a little too close for me right here. I'd put this in the category of I don't have anything to do with it right now. I think it could turn around and go higher, but I don't see enough evidence yet that I'd be willing to, like, jump in on something like this. Uh, these potential bases, especially after that big gap down, can last a lot longer than people think. So
Yeah.
on a shorter term time frame, I say I'm in the I don't know camp on something like this.
Well, and I kind of agree with that. I'm going to go to my favorite thing, which is earnings revisions. And I'm just pulling up, and unfortunately, this isn't a chart that most of you all have access to. I paid Bloomberg $50,000 a year to have access to it. But, looking at 2025, in September of 2022, they were supposed to earn 480. Now they're supposed to earn 92 cents. So in one concept, you're supposed to earn $5. Now you're going to earn a buck. And revisions have gone down the entire time. And until revisions stop going down, it's not going to be a good stock. Maybe it doesn't go down any further. So what I'd say is give me 2 clean quarters on Intel, and I think it's real interesting. I'm going to say one other point here. A lot of the speculation is, does someone buy Intel? I will say this to you. Companies do not like buying other companies that are in distress. Period. End of story. Like running a big company like Intel or any of these, or Nvidia, is complex enough. It's actually, they'd rather the stock be at 30 after 2 clean quarters and then pay 40 than go in and pay 26 today. I know that from dealing with boards and all that. Like, it just, you don't like the you just don't want to get involved in a super complex situation. So I'd say it's a do nothing, wait for a couple clean quarters. Someone was asking about the home builders. I don't know. Pull up Pulte, PHM.
PHM, yeah, okay.
Just random one.
I mean, I think this just reflects the situation that we've been in with kind of the fear over rates, with like Powell cutting and rates still going up, and I think it definitely spooked the home builder bulls, all of the last quarter of last year, and they're starting to curl higher right here. I don't hate it. What's your take on something like this?
Look, go back to the middle of October, and it was at an all-time high, and then people were way too excited, and you got hit with interest rates, you got hit with all these other things, and it just unwound. I really like these. They actually, if you look now at the 10-15 year history of these companies, they've created a lot of value. They've been really good stocks. We have a housing shortage. Ain't anything going to change that. And so I just, I think it's a really attractive. These have been real. It's not even that they've been compounders. I mean, these have been stocks that have put up 30, 40, 50% plus years. So I think there's a really interesting time. They obviously just spiked a little bit with the move in rates here, but I think accumulating these for sort of an intermediate term trade makes a lot of sense.
Yeah, and these things were red hot. I mean, they were market leaders back in the late summer.
All throughout 2024. I mean, it's when the stock Pulte went from 100 to 150, up 50%. So, I don't know. I look at these, and maybe this is a big picture thing, but I go, is there a big technology change? Is there a big change in demand? Is there a big change in supply? And I get no, and no. And it's a pretty nice setup. So I still like them. Let's talk about one that I think could be potentially the stock of the year, a big story. Although I'll tell you, it's disappointing to me that it hasn't been a big story, which speaks to the fact that it won't be. Uber. What do you think of Uber?
A bit of a mess right now, but it could get a lot better soon. I don't hate it. I think Uber is one of those things where I think we've talked about it before, and Uber's definitely on my list of, next Mag 7 type stocks at some point. So longer term, I really like it. I remember, and this is back before you were hanging out with us, Enrique, but I remember getting bulled up on it back here before as it started running. Obviously, that was a huge breakout right there, and it ran for several months. It's been a choppy mess for now over a year. That might be a good thing, though. This could be setting up for a bigger run. I'd like it more over $75.
The thing that's interesting about Uber is if you look at the earnings revisions, they've just been up and to the right. They've just been moving one direction. It's not a particularly cheap stock, although it's not crazy. I mean, I don't really, for these things, I do think valuation matters a little bit. Look, Uber's. I mean, let me tell you something. This is crazy. Hold on one second. So they're expected to grow earnings 30% next year, and the stock trades at 27 times for, what is a semi mega cap, 150 billion with a massive TAM.
Yeah.
Like the big TAM, just so everyone knows, TAM is total addressable market. So Amazon's the greatest TAM story of all time. They went from selling books online to selling everything online, building the physical and digital infrastructure to sell everything online and selling that to everyone as well. So their TAM went from like 4 billion to like 4 trillion, so if you got big addressable markets, Nubank is one that we've talked about in the past that's got a big addressable market. I just the most bearish thing I can say about this is the company's been beating numbers. The numbers have been moving higher. It's got a huge TAM, and the stock hasn't done anything for a year. Yeah. Now it's not going down, but I'm like, what's up? Like, why isn't she married yet? Like, I don't get what's happening with the stock here. But I think it's very interesting. And again, as long as they continue to beat numbers, it's not going down, sustainably.
Yeah, and the fact that, I mean, like, it's right back where it was this time last year. So it's not in trouble. It's not like, oh, this chart's completely broken. I mean, maybe it's just biding its time. And like I said, like, the way I look at this is, I feel like this is one of those stocks where I would be willing to start or add to a longer term position in it, during times like this.
They're growing EBITDA, they've grown EBITDA 60% year over year. Like, this is this is a really intriguing one. One of our colleagues, too, Davis, has flagged this in one of his. He's got a free e-letter. I'm going to get the name wrong. Million Mission. Go subscribe to Million Mission. Google it. He did a nice write up of Uber and why he said it could be his stock of the year for 2025.
Oh, nice. Okay, I'll have to go back and read. I haven't seen that one. I have to go back and read it.
Yeah, it was back in December.
So. I like that idea. I'm always on the lookout for bigger names. I mean, obviously Uber's a well-known name.
Well, that's the thing that I like about it is that, at $150 billion market cap, you can sleep well at night.
Yeah.
And, could Uber be a $400 billion market cap? I mean, not a fair comparison per se, but let's go. We're going to have some fun here. So Uber, 27 times EPS, growing EPS 30%. I can tell you another company that supposedly next year is going to grow 34%. It's in a similar space. It's a company called, what's this ticker? TSLA. What's that? Tesla. So Tesla trades at 130 times earnings, and 11 times revenue.
Yeah.
For the same earnings growth, but Tesla's numbers have been going the other way.
Yeah.
And so I don't like, could Uber have its Tesla? I mean, there's no Elon Musk, or anything like that, but could Uber has its Tesla moment? Yeah, I don't know.
Yeah.
It seems pretty interesting. Like,
I
wouldn't be.
Yeah, that's a very interesting comparison right there.
Yeah, I wouldn't be surprised to wake up. So this stock could double and still be half as expensive as Tesla.
Nice. Yeah, I like that. I like that a lot. Yeah, put me down for bullish on this. I'm going to go bullish. Yeah. Let's talk about this the last couple weeks of January of 2026 and see where it's at. You mentioned
they'll keep track.
Somebody in chat will hold us to it.
Yeah, exactly.
So you mentioned, or maybe you didn't mention, maybe this is just in my head because we were talking about some of these bigger stocks, but I think Nvidia is worth talking about. And I had somebody earlier in the trading desk chat asked me to talk about this chart at some point today before the call was over. So I figured I'd switch gears over to semiconductors since they continue to chop along here. I think what we have with Nvidia is just more digestion. Everybody got ahead of themselves and way too bulled up heading into CES. That makes a lot of sense to me. And then you get the kind of reality candle. I wouldn't read too much into this big bearish engulfing candle right here. That was the day that the CEO spoke, I think, at CES. So I mean, yeah. So you had
the stock had an intraday move of like $400 billion. Maybe it was 375. Yeah, it would have been like the 20th largest company on the S&P 500 on the intraday move. Sorry.
No, that's good info. And it's like one of those things where everybody got way ahead of themselves with it because it's Nvidia. I mean, I still think it's probably one of the most closely watched names out there. So of course we got to fall back into range right there and get a little bit of a reality check. It didn't totally melt down though. I mean, we're right back down to where it closed on that day. Again, this is just something where I feel like it needs more time. I don't think the market is super binary, like you were talking about with like the market can't rally if Apple doesn't do this. The market's fine if Tesla is consolidating too, or if Nvidia is consolidating too. We don't need Nvidia marching to new highs every day to keep the market going, you know. So
So uh, if the stock and the company were just a chart, I love the chart. It's
yeah,
been consolidating. It's a beautiful uptrend, etc. Thursday's truth and trends, though, I'm going to write all about Nvidia. Okay, Nvidia terrifies me, to be honest.
that's fair.
Okay, I think Nvidia is going to lose $1 trillion of market cap. I'm on record with this,
Mhm.
and I've had this thesis for a while. And again, it's nothing against Nvidia. It's
Right.
just I've been through this before with the build out of the internet backbone back 20 years ago. We've seen it before, but I've got a chart that I'm going to throw in that report. Truth and Trends. If you guys don't subscribe, you should check it out. It's free. That basically shows the capex spend from Amazon, Microsoft, Google, Meta, Dell, and Tesla. And what it's showing is that that number went up every quarter last year, but based on the company guidance that they've have out, it's supposed to go down sequentially pretty big from Q4 to Q1. Now, maybe they're going to revise up the capex, but I just think that you're in a really vulnerable spot. This isn't compare and contrast to Apple. Apple
Yeah.
makes all their money with basically subscription businesses, and things like it's an annuity. The phones, like you have one, you got to get one in 4 or 5 years. I mean, I guess maybe you're going to have to replace your Nvidia chips in 4 or 5 years. But I'll tell you this: is we just did. Let's go. I got a number for you. Let's do this. Let me tell you something. This is math. Okay. In 2024, we just spent calendar year 125 billion on Nvidia chips. The year before we spent 60, and the year before we spent 30. That's a lot of chips, buddy.
Yeah.
Like, and I don't, the stock's so well owned. I don't think it's an expensive stock, but if Nvidia misses a number or has a noisy number,
Yeah.
stock's down 30% it's down 15 to 20% that day and will go down 30. So I love the chart, but this is one where our hybrid approach, it's not just technicals. I
Yeah.
would stay away from Nvidia. I would not look, it could go to a new high off a clean print. I
Sure.
would stay away from Nvidia in 2025.
Yeah, that's fair. And we have the next earnings coming late next month, so there is time. So
Yeah.
it could chop along. It could break out before then and go higher. It could just chop along. We'll have to see. But no, I know your longer term idea about that for this year.
In Nvidia in 2025, Nvidia is going to break a lot of hearts. There are going to be a lot of people that are going to be really, really burnt by Nvidia. And it's not because it's a bad company. It's a freaking great company. It's awesome, awesome, awesome. That's not what we're talking about. We're talking about just the normal cycle of capital builds, exposure, et cetera. So yeah, I would not, I would stay away from Nvidia.
Yeah, might be something to put on a list to maybe look at buying after it goes down.
Yeah. So MR is asking, how does a bullish market outlook reconcile with Nvidia tanking? I'll tell you exactly how it reconciles. It's actually very simple math. The group of companies that I just read off, so the people that are buying all the Nvidia, so my thesis is real simple, is the group of companies that's buying all the Nvidia stuff is going to buy less Nvidia stuff. That group of companies is Amazon, Microsoft, Google, Meta, and Dell, and Tesla. Though that group of companies makes up 25% of the S&P 500. When they stop spending as much money on Nvidia chips, their earnings actually go up because they're spending less. So they accelerate earnings while Nvidia earnings get hit. So you got 7% that misses numbers and everyone else beats numbers. 25 is greater than 7. Those are the weightings in the S&P 500. Market goes to new highs.
Yeah. Do you have any thoughts on this Dell chart here? I know someone asked about that earlier too. Looks a little messy to me. Short term.
Yeah. Actually, let me just pull up. You know what I'm doing? I'm looking at earnings revisions.
Yeah. Yep.
Yeah. I mean, I do feel so. Dell is kind of an SMCI. All these guys are on playing the network build. And I think 2025 will be the story where we go from the AI network build to the AI network harvest. Okay. And the funny thing is, people say, well, the harvest won't be good enough. Like, I don't know. Like the expectations in Microsoft and all these other companies are not super high in regards to what they actually have to get from AI. And if they drop their capex, their earnings will go up.
Right.
So Dell kind of falls into the build out. It's just like I think we just built out. I mean, I just told you we did 125 billion. Nvidia revenues are a proxy for the AI build. It was 125, up from 60, up from 25. And by the way, people have it going to 170 this year. I'm just telling it goes 150, 130, 140. 140 off of 25 2 years ago is an awesome number. I'm talking about the revenue numbers at Nvidia.
Hmm.
Yeah, so I just think Dell is I have the same caution that I do, and the same thing goes for SMCI.
Yeah, that's fair. That's fair. And even looking at I mean, just the entire semiconductor sector here. Yeah, I mean, this is a very similar chart. And NVIDIA obviously is the bully in the room with something like this. But yeah, still marking time. And it had the same the same quick decline and quick snapback right here. Still kind of a choppy mess.
Can
Uh,
I tell you which one of those though? I'm going to throw this out there. I've been working on this. Which one of these? There's a company that's actually, I think, a beneficiary of the harvest in the semiconductors.
yeah.
And I know we're doing a lot of fundamental stuff here today. But this is what we do. We combine charts and fundamentals. Actually, I shouldn't have told you that I got a fundamental story. I should just give you the chart. Micron, Micron, MU.
MU. Yeah. Yeah.
We're going to need a lot of DRAM.
Yeah.
And the thing is, you don't, once you get those GPUs in and the servers, now you need memory, and you don't put in a ton of memory to start because it's just different. You can layer it on, and I think this could get back to. That's why I'm not bearish on the semis. I'm not bearish on semis. I think they're fine, but semis is like saying you're bearish on. I'm trying to think of an example. Food. I don't know. Like, there's a lot of food. Like, semi says a lot of different things. Like,
Yeah.
it goes into a lot of end markets. And overall, the semis have been acting pretty well, because I think what's happened is a lot of areas got crushed. Those areas have settled out a little bit and will begin to recover. And then a lot of areas flew. And those ones, I think, maybe are a little overextended, a little vulnerable.
Yeah. Yeah. Um, I guess I hope we're getting close to the end here. I wanted to just briefly shift gears and talk gold, since we have a new gold position on as of last week with the miners. Gold is looking quite nice here with this breakout. How far do you think we can run with the yellow metal here, now that we're taking off?
3,200 to 3,500. I mean, it's Bitcoin-esque.
Yeah.
I think. I like gold a lot. I think that we've built the world's changing. I see more legitimate conversation about gold today than at any other time in my 30-year career.
That's interesting information.
And
Yeah.
and I do think that what's happened. This is going to say two data points. I think that whether it actually really makes any difference or not, the debt levels and the deficit levels have moved into the market psyche in a big way. And I say whether it makes a difference, I don't know that it actually will ever make any real difference, but it's certainly a topic of conversation. And I swear that the movement in Bitcoin is actually going to bring more attention to gold. I think they're freaking frack at this point. I think you have people that wouldn't look at. I think you have people that wouldn't look at gold before, that buy digital gold, and now they start thinking about it, and they're going, "Oh, I'm buying gold because of the debt. Oh, I'm buying Bitcoin because of this." And they go, "Oh, maybe I should buy some gold too."
That's interesting. Since for so long they've been projected as big time competitors, like Peter Schiff versus Sun and all that stuff.
Look, I think, let me put it this way. I think they're both BS. I think Bitcoin is worthless. Gold is some shiny, soft rock that has minimal industrial uses, but we've all agreed they're worth something.
Right.
And so they sit there as these two reserves. So I don't know that they're competitive. I think that they might actually be complementary. That more and more people say, these are the two that are up there, for all of our UK fans. So these are the two. They're going to go in and buy it. So I like Bitcoin breaking out. I like gold breaking out. I think both of them will end the first half having hit new all-time highs at some point.
All right, there you have it. Bitcoin and gold holding hands, riding off into the sunset together.
Exactly.
Before the summer months, but when it warms up around here and it's not 0 degrees. Yeah, great stuff. And I'm obviously bullish gold. I liked We have a position on a GDX. I like the turnaround right there. And I think we can push a lot higher from here. It feels like, and this is anecdotal, but it feels like everybody stopped talking about gold once it started consolidating, and no one mentioned it at all. At least nobody mainstream was mentioning gold after the inauguration because everybody was so hung up on everything else that's happening. And now it's quietly come back into the forefront right here. So we'll see if all the chatter picks up. And it really
I like this trade a lot, and I think there's a lot of miners that I've been reading about that seem real interesting. So, you know, so don't own Nvidia, buy Apple, gold, and Bitcoin. How about that? There's the message for today's broadcast.
There we go. Perfect. And as you said that, the clock struck noon. Perfect. So there we go. Well, Enrique, thanks for joining me once again this week. It's been a lot of fun. I think we covered a lot of really good stuff today on the call. I hope you guys are happy that we got to some more tickers. I know last week we did a lot of bigger picture stuff since we hadn't chatted since before the holidays, but now we're hitting the ground running. It feels like we got some more bullish action here heading into earnings. And all right, folks, have a great rest of this short trading week, and we'll be back same time next week.
Thanks, everyone.